Okay. Okay, is everyone ready to learn and level up your portfolio building? If you are, can you type LU in the chat? Okay, LU stands for level up. Okay, level up together because this very special workshop will definitely help you to level up how to build a solid portfolio. And you're going to get insights not just from me, but from a fund manager, like a multi-asset fund manager. He himself has years of experience and he's here to come and share with you tonight as well. Okay, so without further ado, I'm just going to share the slides. And if you guys can see the slides, please type S in the chat. Okay, it's a gold class tonight. Okay, you guys are in gold class. A lot of you guys love to watch movie, and usually the gold class is the premium version. And indeed, this is the premium version because I have a premium guest tonight. Okay, that's awesome. All night. All right. So firstly, let me just share with you a little bit more about the context, like why am I having this very amazing interview again? Because last year, okay, in case you don't know, all right, okay, everybody already know this asset class, right? This asset class is actually gold, and gold has actually outperformed the U.S. market by almost like 100%, right? So if S&P 500 increased by like in this case 23% in the last 1 year, gold actually increased by almost like 45%. So the outperformance is really shocking. How many of you were quite shocked by the performance of gold? If you are quite shocked, can you type me in the chat? Like you didn't expect, huh? How come gold price like soar out of sudden and then like in the past 1 year it's been like so bullish, right? Yeah, Gwen was shocked, Zen was shocked, and in fact, I was shocked too, right? And I still remember about 1 year ago, I invited this very special guest. Okay, later on, I will officially introduce him. And he's here tonight again, right? So when I interviewed him 1 year ago, and after that, I just put these insights on my YouTube channel. And how many of you actually watch this interview that I did last year? If you watched, can you type W in the chat? How many of you were here together with me last year and you actually learned directly from Laurent last year as well? Anyone? Anyone? Or all of you guys are new, okay? Or maybe you couldn't remember, okay? But for me, I clearly remember because right after I learned from Laurent, I decided to take action. I was like, okay, so it does look like gold has a lot of opportunity, and I also want to diversify part of my portfolio into other asset classes as well, apart from just the US market. And that's how 2 months down the road, okay, after I learned from him, I went to buy gold. and and that's why 10 months ago you saw another video being released and I invested like $22,000 buying. Okay, anyone know what did I buy? What did I buy? Okay, I bought gold bar. Okay, I literally went to buy two physical gold bar. And in fact, after I bought it, the price came down a little bit. But I was like, okay, it's okay because I'm in it for the long game. So it doesn't matter whether I kind of bought it at all-time high at that time and then the price came down, right? But I wasn't worried because I know, firstly, in the long run, okay, this is something that I want to do anyway, right? I have time for it to grow. And secondly, in fact, I also think that this like $20,000 is also not a huge part of my portfolio, so I'm okay, right? And never did I expect that ever since I bought it, like the price is shoo, 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 shoo. So yesterday when I talked to my mom, I was like, mom, I should have bought more. I should have bought more gold. But then she said, well, you can't predict the price, right? So we just let it be. But most importantly is right now, gold is all-time high again. Whether is it still a right time to go in? How many of you have this question like, oh, gold is all-time high? Is it still the time to go in? If you have this question, can you type question in the chat? Okay, question mark. Can you put in question mark in the chat if you have this question as well? And I have the same questions as you guys, right? So that's why I am not a gold expert, right? That's why I want to invite someone that really has so many years of experience, like building a portfolio for high net worth clients, for institution consultation and all this. And he himself, right, he has been doing this, but very importantly, okay, regardless, whatever things that you hear tonight, it's really for educational purposes. It's never a buy or sell recommendation because at the end of the day, it's really about taking responsibility of your own investment. How many of you agree with me? Okay, if you agree, can you type A in the chat? Okay, A stands for agree that responsibility of your own money, being responsible is very important. Awesome. Thank you, Kelvin. Thank you, Janice. All right. So yeah, so make sure you always listen to the insights and internalize for yourself whether it is suitable for your portfolio. If it's not, then it's okay, right? But if it is, then you can consider using whatever advice that we are going to share with you, the opinions we're going to share with you, and build a better portfolio for yourself as well, right? So that's why, without further ado, I want to officially invite our guest, right, Laurent Lequeu. And let me just give you a very quick background about Laurent himself, right? He himself is like I said, right? He is a multi-asset fund manager, and he has worked with institutions, high net worth clients across Asia, Europe, US, and right now he is based in he actually come to Singapore very often, and to basically meet his clients as well. And very importantly, right, he also has very deep understanding on all major asset classes, not just gold, but like bonds, equities. So his job is to really help his clients to craft a very solid, like all-weather kind of portfolio. So that's why I think that his insights will be very useful if you're also looking for something that is more balanced in general, right? And that's why, especially with the world going ongoing with a lot of geopolitical tensions, the US dollars weakening, and gold rising all-time high. And that's why I thought, oh, such a great time for me to invite Laurent again to come here. So how many of you are excited to learn from him? If you're excited, can you type E in the chat? How many of you are excited? Awesome. Okay, so without further ado, let me just pin Lauren to be here. Hi, Lauren. Thanks so much for your time again.
Hi, Chloe. It's my pleasure to be back on your show.
Yeah, it's gonna be a very amazing show because they are going to learn so much, and so am I. I'm going to learn so much from you as well. So, oh, in case you guys are wondering, Lauren, can you share with us a little bit more about your background? Like, where are you from, and when did you start investing? If you watched the previous episode, he started when he was 13 years old. So, yeah, he has tons and tons of experience. So, are you like, where are you from actually?
Well, I'm originally from Belgium. I work in Luxembourg, and then almost 15 years ago, I moved to Asia, to Singapore, and I work for different asset manager and also family office. And then since November 2023, I start my own business, the Macro Butler. So I write a Substack with the same name, and I also help high net worth individual to manage their portfolio.
Yeah, later on, I will share with you guys a link if you want to subscribe to Lauren's newsletter. He has lots of insights as well, very deep stuff. And yeah, but before that, let me start off with the first question. All right. So, with like this situation ongoing, right? So many different markets across, like you have actually have dealt with so many different markets across your career. And right now, in fact, since last year, in fact, or maybe since earlier, you are actually very bullish on gold. What's the reason behind your strong conviction?
Well, I think that we need to put things into perspective. First, I look at financial market and the world through the lens of the business cycle. So there's basically four seasons in the business cycle. It's inflation, deflation, or economic boom and economic bust. And then, so you can combine this into four different seasons. And in fact, over the years, getting more experience, as I learned about the permanent portfolio. The permanent portfolio was in fact developed by Harry Brown. So it was once upon a time US presidential candidate for the Libertarian Party. And he realized in the 1980s that, in fact, investor could basically invest their portfolio across four asset class: cash, bonds, equities, and gold. And he, in fact, matched one of each of these asset class with one of the four seasons of the business cycle. And why I've been very bullish on gold, at least since 2020. It's in particular because the world and the US, but mostly the entire world, is in an inflationary boom. So in an inflationary boom, usually investor must own properties and must avoid contracts. So here I explain what are properties and what are contracts. So I go back to this four asset class from the permanent portfolio. On one side, you have cash and bonds. These are basically contracts that you have with the issuer of the bonds or with the government which issue the cash. So these are contracts, and usually contracts are giving a yield or a coupon or an income, which is called an interest rate, basically. On the other side, you have properties. So you have equities. I think everyone knows what equities is. Is you are a shareholder, you own a part of Berkshire Hathaway, you own a part of ExxonMobil. And gold is the ultimate property, since gold is in fact the property with no counterparty risk, given that one coin of gold represents only the ownership of one coin of gold that you own in your pocket. So if I go back to what Harry Brown did, and then what I learned across various research that I've done, in fact, as I said, one of each of these asset class performed the best in one of the different four seasons. But initially, what Harry Bond did basically is that he was a lazy portfolio manager. So he backtested the study of an equal weight portfolio of these four asset class. And so basically he invested 25% in each of the four asset class. And he looked back and he came to the conclusion that if you rebalance all of these asset class on a monthly basis or quarterly basis, in fact, over the long term, the performance of your portfolio, so the permanent portfolio, will be around 3 to 4% above inflation rate. Means that this kind of portfolio in a normal environment, and this has been also backtested by other asset manager, other people. I myself also backtested that portfolio on China, on US, and on different European markets. And across the long term means over a 20-year time horizon, you will deliver a 3 to 4% on top of inflation. So this is in fact when I teach sometime to students, and I always start with this permanent portfolio because in fact for those who have no clue of the macroeconomic environment, and for those who have no time to actively manage their portfolio, the rule should be that they own a quarter of each of these asset class in their portfolio and do nothing, and over the long term, they will do very well. There's a caveat to this permanent portfolio because nothing is perfect. In times of war, we all know that in times of war, contracts are kind of worthless because government change, government are replaced by new type of governments. So the contracts are losing their value. And also, if the war imply a destruction of the country, and here, backtests have been done on the French permanent portfolio during the Second World War, or more recently, if you do the same backtest on the Russian permanent portfolio since the start of the war, you can see that this portfolio has has suffered quite a significant drawdown. And even if you look back at Second World War, in fact, the French permanent portfolio dropped to 25% of its value, 25 cents to the dollar, because only gold kept that value since France during the Second World War was completely destroyed. So, I mean, this is kind of a shortcut to give a first, I would say, tip to everyone. If you don't know anything about finance, and if you don't have really time to assess the macroeconomic environment, my advice is always for everyone to invest in this four asset class on an equal weight basis. And you can do it very easily because, in fact, you can use ETF. So you don't even need a big amount of capital to start investing. I would say with $1,000, you could already start this kind of permanent portfolio. So if you have a kit, let's say 2 3 year old kids, you can put $1,000 $5,000 aside, and you allocate equal weight among these four asset class. And when your kid will go to university, probably that portfolio would have delivered a very decent return, and it will in fact probably pay for the tuition fees and for the university fees of your child. So that would be the basic. And I think that the big mistake that the world has done is that no one has talked about this permanent portfolio. I mean, this is something that has been kept under the radar, mostly, I would say, by the bankers, because you realize that, in fact, everyone can simply deliver a decent performance in times of peace. So, I mean, this is to come to your question, because I think I spent a lot of time ahead of answering your question. Why am I bullish on gold since the start of this decade? Because it seems clear that first, we are in an inflationary environment. There has been COVID, there has been wars, there has been a supply chain disruption everywhere. And this is clearly has created a lot of inflation. And we all know that during an inflation time, uh, you need to own properties rather than contracts. Because if you own contracts, they will give you a fixed coupon. This coupon is not adjusted to inflation. While you own properties, in fact, if you own share in a good company like Berkshire Hathaway or Walmart or Coca-Cola, it's likely that that company will be able to pass through higher input costs to its customer. And if that's the case, in fact, it's likely that the company will grow its earnings faster than inflation. So owning good quality companies, and I mean, I've given here some names. These are not investment recommendation. I will just give some example of good quality companies that have done that EPS growth over the years. And so what I mean here is we are in an inflationary environment, so you need to own properties. So you have equities and gold. Why gold? Why do you need to own gold? To be honest, there are many reasons that I could spend more than an hour to explain why to own gold in the current environment. The first one, I would say, is really clear. Since the start of this decade, we have seen an increasing
Lauren, do you mind if I just summarize a little bit of what you have said so that everybody is clear on what the gist before we move on? So you were talking about like basically there are four different asset classes that we can invest. Basically, we diversify our portfolio with cash, with bond, with equity, and gold, right? And your advice is if you like people here who are watching who have no idea how to start, then the easiest way is just like every single one split 25%. So that's how in total make up like 100%. Right. But right now, of course, the flaws of this portfolio, everything has good side and bad side. The bad side is like if it's bond, sometimes like if it could be due to wars and all this, maybe people the companies might default, maybe the government might default. So that's why you, in your opinion, especially in this more uncertain time, in inflationary environment, it's actually better to own properties, which includes gold is part of property. Equities is also property, and because it's true ownership, and that's and they are able to build a stronger portfolio with that. Is that what you mean?
Yeah, that's right. I mean, I mean, for those who have experience in emerging markets, you just look at what happens at emerging markets over the past decades, and more recently, you can take the example of Turkey, the example of Argentina, the example of Venezuela. I mean, these countries have governments with no credibility, very fragile uh, government system, and have been run with structural inflationary environment. And you can see that the stock market of Argentina, the stock market of Turkey, the stock market of Venezuela in local currency has always moved from one all-time high to another all-time high because investors in these countries have no other uh, solution to protect their wealth than to buy equities from the local companies, which are potentially able to grow their profit faster than inflation. So
Mm,
I don't say that, I mean, this is kind of an extreme case that we have seen across countries and across history. But I mean, even in the US, where we have a CPI which is not far from 3% and which is most likely to increase, and we all know that the real inflation rate is above the CPI rate. So I think that we really need to own uh, properties rather than contracts in the current environment. If I go back to gold, as I said, I mean, since the start of this decade, we have seen an increasing polarized world. We have seen increasing tension between the Western countries and the BRICS. And I mean, this has clearly been the trigger for the start of the performance of gold. Because if we look at what the central banks in the BRICS countries have done, especially since 2022, and when the Russian assets were frozen by the US government and Western government. In fact, other BRICS countries have started to sell their US government bonds that they own as a reserve and replace them by gold. So you have central banks from all these BRICS countries, and in fact, the Monetary Authority of Singapore has also increased its reserve of gold over the past few years. So it's not only those countries which are, I would say, in the geopolitical tension with the US, but also other countries in Asia have followed the trend, which is to buy gold as a way to preserve their reserve. And I mean, these central bank buyers are clearly not price sensitive. The goal of these central bankers is to protect their wealth first. So the goal of these central bank is to buy when they have some cash flow available. They will buy gold, whichever the price will be 3,300, will it be 3,500, will it be 4,000, because their goal is not to lose their reserve potentially if their reserve would be frozen or they would enter a conflict with the US or with the Western world. So I would
mm,
think that for this reason only, and because this trend of de-dollarization among the BRIC countries has just started, you will see a big, continuous big inflow into physical gold in the next few years.
Yeah, if you
Second,
see the chart, like, okay, just to highlight what Lauren is explaining, like if you see like central banks are actually buying back gold, and then what Lauren gave insights is when the government buy, they don't really care about the prices because what they want is wealth preservation. They want to make sure they preserve whatever value that they need to preserve. So they will just buy, right? And if you see these charts, how many of you can see that in the recent years, especially like in 2022 onwards, the blue bar is significantly higher as compared to in the past. You can see that. Can you type me in the chat? Right? So this is basically World Central Bank gold net purchases. So that's why you see that actually the different central banks are actually buying gold quite significantly over the last few years. So Lauren, you're saying that because they want to preserve. Any other things that you want to add on this?
Yeah, I think that, I mean, again, if you look back at history, and it's also related to this trend, is that gold is the asset to own in a wartime or in environment. I mean, as I said, if you look back at the performance of this permanent portfolio during the Second World War, for the example of France, I mean, all the three other asset class went to zero. So
Mm,
it is clear that countries which are in war or which are under the threat of war, people in these countries cannot even buy equities, because I would say that equities could also see their value going to zero. So the last asset and the only asset that they can buy is gold. Of course, this is not the main reason today that we see the performance of gold. The first reason, as I just said, is that central banks in the world, and mostly in the BRICS countries or Asian countries, are buying gold to replace their US dollar asset and US Treasury asset by physical gold.
mm. And I
Another
realize
reason.
US actually has the highest amount of gold reserves, the US.
Yeah, that's right. I mean, that's right. We are still waiting for Doge to get an update on the value of gold in Fort Knox. It seems that after Elon Musk left Doge, the government is not really in a hurry to update us on the reserve of the US in terms of gold. But I would think that what I would say is that other countries, and in particular China, has clearly picked up in terms of reserve. I mean, it's still behind most of the Western countries, but on the opposite of Germany or the UK, which have been selling gold over the past few years, in fact, China is an aggressive buyer of gold.
All right. And I understand you also have some charts that you also want to share from your end. Do you want to share some of the insights that you have prepared?
Well, I think it's okay because it was related to the permanent portfolio. For those who want my chart, I will ask them just to email me. I will send them by email at the end of the interview. I can give my email where they can contact me.
Awesome. And for yourself, like how do you, as a portfolio fund manager, right? And when you're advising like high net worth clients, especially, do you suggest a different kind of gold strategy compared to, let's say, people with a smaller portfolio? Like, how would you advise in terms of the percentage, when it comes to gold, as part of their portfolio, like 10%, 20%, or how?
Yeah, well, I think that I mean you already understood that in the current environment, I advise my clients to have more than 25% of their asset in gold. Right? In fact, the ideal allocation would be between 30 and 40%. And for those who can, I would say, stomach the volatility, they can even own some silver or own some platinum. But I mean, this is not for everyone because the volatility is much higher than for gold. So, in terms of what kind of instrument investor should use here, this is not an investment recommendation. This is just all practically anyone can buy gold. I would say the most easiest way to get exposure to physical gold would be to buy a physical gold ETF, which is listed on the Singapore Stock Exchange or on the New York Stock Exchange. This is not, I would say, the preferred way, and I will explain here why. Because uh, gold is a particular property. It's a property with no counterparty risk. When you buy a share of ExxonMobil, at least at the end of the day, you still have the risk of ExxonMobil. And I mean, even I don't think that ExxonMobil will ever go bankrupt. But I mean, one day ExxonMobil could potentially go bankrupt. At the other hand, physical gold is you have no counterparty risk,
Mm,
meaning that there's no counterparty uh, behind the fact to own the gold coin in your hand. This is the big difference with equities or even bonds and even cash. So
mm,
this is the first step. That's why I would say that even it's easier for everyone to buy gold ETF. I would say that it's preferably to buy physical gold rather than gold ETF. But I understand that the downside of buying physical gold is that you have the risk of storage, meaning that if you store physical goods, I mean, there's the risk that you store it at home. There's the risk that someone come to your house and steal your gold bar, and you lose your gold bar. You can ask for a private vault or a bank vault to store your vault, but then, I mean, again, if you store, for example, in Singapore, a lot of gold is stored at Le Freeport near Changi Airport. If one day there's a ice at Le Freeport, I mean, you can potentially lose your ownership of gold bar. So there's the problem of storage for gold, and this is the problem for every commodities. I would say that luckily gold is easier to store than silver. It's easier to store than oil. It's easier to store than copper because of its quite huge value and its relatively low volume. But there are still this risk. And then finally, I would say that I mean, everyone must understand that gold is an anti-fragile asset. And
mm,
here I come back as all gold evolves against the other three asset class that I mentioned among the permanent portfolio. If you look at history, in fact, across history, we are kind of a bit on a different period of time on that matter. But gold usually is negatively correlated with other asset class like cash, bonds, and equities. Over the past 5 years, since the start of this decade, clearly gold and equities have been quite well correlated. And how I explain this is quite simple, is that a lot of investor, institutional, even fund manager, wealth manager, and also retail investor have understood that owning bonds or owning cash in an inflationary environment is a for sure lose investment. So they have reallocated and they are still in the process of reallocating their allocation from cash and bonds into gold and into equities. And that's why that since over the past 5 years, we have seen an increasing correlation between gold and equities. But I will say that if you go back in history, and I expect that when we will have potentially some correction in the equity market down the road, you could see that decorrelation appear again, and you could even again see the all gold is an anti-fragile asset, meaning that it usually perform and have the performance across asset class compared to the performance of equities and especially the cash and bonds. So, I
mm.
mean, for those who want to keep this anti-fragile aspect and this no counterparty risk aspect, I would say the ideal is to buy physical gold, but of course, there's the downside of the cost of storing the physical gold.
Yeah. So what Lauren is saying that because it's a generally not so correlated. So that's how gold can be part of the portfolio diversification. Now, I think having said that, we also cannot deny the fact that gold is also quite volatile in terms of its prices. So don't assume that once you buy gold, then it's going to be like slow and steady and just keep on going up. It has actually been through its own cycle of volatility as well. And I mean, in the long run, okay, if you track like long enough, I mean, this is the if you look at 2007 all the way until now, the stock market, which is in this case, for example, okay, this the GLD is the stock price here, the price here. So there's a period of time that gold also came down like 40 over percent, right, for GLD. And then at the same time for the stock market, it's kind of the reverse. Like the stock market actually start to go up while the gold was trending down. And then like if you look at from 2007 all the way until now, well, actually gold still outperformed the stock market. It's quite surprising. Like what, almost 20 years, right? If you buy gold, actually you make more money than holding onto S&P 500. But nevertheless, there's definitely period of volatility. So, Lauren, what's your take on, do you foresee gold also having correction that could be quite major in the next few years? Like if you see this all the way from 2011 all the way until like 2016, 17, actually for this like almost like a 1 decade of time that gold wasn't moving anywhere and finally a rebound back. So do you foresee this happening?
Well, I think that first, nothing is going one way up or one way down, so there will be potentially a pullback period of pullback. I would say that what we have to monitor and what would be the reason for gold to have a major drawdown, it would be that the environment of the business cycle change, meaning that we return into a deflationary environment globally. And second, the geopolitical environment change, meaning that we return to this period, in fact, of 2011 to, I would say, the late 2010, where, in fact, if you remember, this was a period of almost not global peace, but it was the time where China entered the WA, the World Trade Organization. It was the time where there was kind of a global collaboration between the West and the East, so that I can easily explain why gold performed poorly between 2011 and the late 2010s, because it was not the right environment for gold. But again, for those who want to invest or in gold, who are already invested in gold, what they need to monitor at the end of the day, if they own more than 25% of their portfolio into physical gold, is there a change in the geopolitical environment? Is there a change in the business cycle? And I mean, to be frank, and I try to, and I always say that the market always tell the truth. Only newspaper tell lies. Because if you look what happened around the gold price during the Alaska summit 2 weeks ago, I mean, gold price barely moved during that time, and it was clearly a sign that investor understood that in fact this summit wouldn't change much of the geopolitical environment. And in fact, we are well above the price before the meeting between President Putin and President Trump. So I guess that the gold price is always telling a story that maybe not all the newspaper are telling. And for now, the gold price is still telling us that, I mean, the world is still globally into an inflationary environment. Mostly, it's an inflationary boom. But I can also expect that down the road, the world could be pushed into an inflationary bust. And again, if we look at the past history, in fact, and we look at the 1970s, this is probably the best example that we can get. When we are in an inflationary bust, meaning that we have a recession and inflation, in fact, at that time, gold is the best asset class to own because even the stock market and most of companies will have difficult to generate earnings growth. So I will say that I won't reward a 10% drawdown. I guess nowadays everyone is getting use of a 10% drawdown on any asset class. But over the long term, in fact, I would monitor any change in the business cycle, any change in the geopolitical environment to change my opinion on gold. And now I'm going to end here, and this is for sure not an investment recommendation, but I want to take a lot of risk with the audience. So I would think that by the end of 2026, we could easily the gold price at $5,000 an ounce.
Currently, it is
5,000 US dollar an ounce by the end of 2026.
5,000. Okay, okay. Let's see what is the current price right now. Okay, let me see. Oh, how do we okay, that is
Yeah,
using
the
future,
price
is
is
it?
3,535.
Um, so right now it's 3,000. So you use yeah, 3,500. So you are expecting it to in 2026, which is next year, it's gonna increase to 5,000.
At the end of the year, December
Okay.
2026, 5,000 target. But I
Wow.
would say this is not an investment recommendation, and if it doesn't work, maybe I'm not allowed to come back on the show anymore.
But I think very importantly, it's just really about position sizing because if you do see that goal as, a long-term value preservation, it's a very, I think, safe way to diversify part of your asset. How many of you have similar opinions on gold as wealth preservation? If you have similar opinions on this, type S in the chat. And in the meantime, Van is asking, 10 years US Treasury is actually picking up. You have any comment on its impact on the gold price?
Well, historically, higher treasury yield is bad news for gold price. I mean, because again, investor would be tempted to go into a yield that is around 4.5% rather than on physical gold. But I would say that again, if you look at charts since the start of this decade, in fact, rising treasury yields have little impact on the gold price. And again, I come back to this. I mean, the main driver today of the gold price is the central bank buying. And this central bank buying from the BRICS countries, from Asian countries, I mean, these people are not really price sensitive. They are not sensitive to higher treasury yield because at the end of the day, what they want to do, they want to get rid of their US dollar and they want to use their US dollar reserve to buy an asset that they can own in their own country, that an asset that has no counterparty risk, an asset that will be anti-fragile in an increasingly tight geopolitical environment. So, I mean, you can have a 10-year yield at 5%. That could be the trigger potentially for, let's say, a pullback in the gold price. But I don't think that this will impact as well the trend in gold price because at the end of the day, what our treasury yield also reflect is that investors have less confidence in the US government. And I mean, you just take the example again of Europe nowadays. I mean, UK yields are at more than 30 year high, sorry. So, I mean, all these reasons is because governments in the Western world are increasing their deficit and investors have less and less confidence. Even Western investors have less and less confidence in their government, and therefore they replace their cash or their fixed income asset by gold. I mean, I'm working with American clients, and even American clients are telling me that they don't trust their government anymore, and that's why they're also buying gold themselves. So it's not only a central bank, I would say, phenomenon. It's something that everywhere in the world, in any countries which are facing geopolitical tension or which are facing rising budget deficits, people don't trust their government anymore. And if you don't trust your government, again, I come back, the only asset to own and the only asset that the government cannot confiscate, in fact, is the gold coin you have in your pocket.
That's right. And I think some of the our follow audience here is also curious about your view towards Bitcoin because people also see it as the new digital gold, right? Do you personally see that Bitcoin has the potential to become another asset preservation tool?
Okay, I will disappoint a lot of the audience here. I stay away of Bitcoin. First, I don't really know what's behind Bitcoin and who has created Bitcoin and I mean who control Bitcoin. On the other hand, I know that one gold coin in my hands remain one gold coin, and it's one gold coin. And so, first, for this reason, I would stay away from Bitcoin. The other reason that I stay away from Bitcoin also, I mean, we talk about the volatility of gold, but if you look at the volatility of Bitcoin, is even higher. And we had in the past big swings in the Bitcoin price where you can lose easily 50 to 70% of your value in a very short period of time. So I still believe that for those even who believe in the, I would say, the Bitcoin code, the volatility is not something that is adequate in a diversified portfolio. In fact, I would say that, Bitcoin is a trading tool rather than an investment tool.
Okay, I see. So that's why I think Lauren he wants to make sure he invests in something he understands because to him Bitcoin is something that he doesn't really see the entire infrastructure right now being used in the future. So that's why he still prefer to fall back to what has been proven, which in this case is actually gold. Any more additional questions from you guys? And while waiting, maybe some questions coming in, maybe can you share with us one final piece of advice, that you have for our audience here, from your decades of investing experience, managing money for high net worth clients, to even managing your own portfolio. What's your advice for investors here who can become better in terms of their own portfolio management?
Reference to Charlie Munger, and I will first say always stay humble.
Mm,
I think that every fund manager, even the best fund manager on the planet, have suffered major losses, have made mistakes. I've been in this business for 27 years, still making mistake. I try to make less and less mistake when I'm getting older, but always be humble. And also, I would still advise everyone to, as much as possible, manage risk. I think that once again, a misconception that is given by the financial industry is to focus on return, but never focus on drawdowns. And
mm,
in fact, when I teach to children, I take this simple example. If you have a share price value at 100 and there's a problem in the company, the share price declined to $50, you lost 50%. To
mm,
recover to your initial amount of investment of 100, you need to double your investment. So the priority of everyone in this world, and especially if you are traders, and I guess the best traders know this, is to minimize the drawdown and minimize
Mm,
the risk. And be very humble, because at the end of the day, the market is always right. It's not. I know. I've listened a lot of investors telling me is this, is that, but the price on the screen is always the right price. And so the lesson that I want to give to everyone is humility, and also think of doing good by investing.
Pardon, you were saying humility and what?
Do good by investing means that I have also a lot of clients who ask me not to invest in some sectors or in some stocks, because
Ah,
they think that these are not representing their own value. And I
mm,
think that more and more people are taking into account this. I see more and more people asking me to avoid companies in some sectors, like those manufacturing weapons, or those
mm.
selling tobacco, or other things that can be, I would say, negative
Harming
for the
the
long.
human beings and all this. So basically, it's like you can choose to invest in something that align with your value, right? And indirectly, when you are buying the shares of those company, you are supporting them. So you can choose to support companies that you truly believe in that actually are doing good for the mankind, for the human beings. I think that's how investing become very purposeful rather than just a money game, right? Because it's actually real businesses behind that. All right, okay. So one more question from Karen. Karen is saying that what's your view on World Gold Council seeking to launch digital form of gold?
This is part of the tokenization of the world, right? But once again, once you create a token, even if it's backed by physical gold, you will have the risk of the token at the end of the day. It's just a digital form of the ETF. So
Mm,
I would still think that yes, it will be a very easy way for some investor to get access to physical gold, but it won't replace the fact that owning the physical gold in your own hand will keep you owning an anti-fragile asset with no counterparty risk, and which cannot be confiscated.
that's true. So when you have it in your hand, should anything happen, you can always run with it. So, so like that's why last year after I did this interview with Laurent, I actually went to buy physical gold. Like I bought like two gold bar, and yeah, I think and for me it's really for long term holding. Is just like put it in the safe and like just let it be and let it preserve. And should anything happen, I can always run with it. That's the whole idea. Um, and also, do you Van is saying that he don't like buying gold ETF because of the third party risk. But at the same time, is there any other way that you recommend beside buying the physical gold? Like for example, buying gold in an online commodity exchange. Do you think is a good idea?
Well, I love these adventurers, to be honest. Unless you check where is the online gold seller ranking, because I'm not really sure that this counterparty risk is a good counterparty risk.
Yeah, so when you buy an exchange, there's also an exchange risk. So I think that's why at the end of the day, when you actually have the physical gold, that's the safest way in a way, right? So
If, if I may, I would also advise people to buy their physical gold, to register a bullion dealer. In Singapore, you need a license to be a bullion dealer, and so you need to be regulated by the MAS. And I would advise everyone to buy their. I'm not making any advertisement for any good bullion dealer here, but there's a list of registered and gold bullion dealer for Singapore, and I advise people to stick to that list and not go for dealers which are not registered at the MAS.
So basically go for credible, registered, regulated dealers if you were to buy physical bar, right? Physical gold bar. Yeah. All right.
That's
So
there's even, I mean, I can even say that I'm not giving you also no recommendation, but UOB in fact to its clients. So it's another way for those who are clients at UOB. You can in fact buy gold bar directly from UOB. Otherwise, I would advise everyone to look for a registered gold bullion dealer and regulated gold bullion dealer.
gold bullion dealer. Okay. So I think I bought from the established one. I think so. So all right. So maybe can before we we kind okay, how many of you felt like you learned a lot from Lauren's insights tonight? Okay, if you felt you learned a lot, can you type learn in the chat? Right? Be it is it about having gold as part of the portfolio plan? What is the percentage? What is his expectation of gold future ahead? You know, like in terms of prices and all this. If you learned a lot, can you type learn in the chat? Awesome. Thank you so much, everybody. All right, that's what I want to provide you guys different insights, not just from me, but really from the professional who has way more experience than me in this case. And thank you so much, Lauren, for spending your precious time with us. And I also want to ask you guys, like, if you like about Lauren, if they want to follow your work, your newsletter, where can they find it?
Said I write a free Substack, so the Macro Butler, you can Google, you will find it. I also have a Telegram channel where I put some comments on everything that is happened in this crazy world. So you also check the Macro Butler on Telegram. You will find my Telegram channel. And then finally, for those who want to be in contact, if you want the slides or if you are a high net worth individual, you can contact me at info@themacrobutler.com and I will reply every email. I reply all the email that I receive with happiness. And I mean, if you are a high net worth individual, I can also offer you a free review of your portfolio.
Whoa, that's awesome. Okay, so if you're a high net worth individuals looking to look at like how can you position your portfolio better, Lauren is actually giving you a complimentary review. That's really awesome. So this is the Microbapter Substack, so you can go and subscribe to that. Actually, it has so many deep insights that we didn't have time to go through. So if you are very interested into Lauren's thought process and a lot of data that he used, I think you will find a lot of insights over there. And on top of that, right, you can also find Lawrence on LinkedIn. All right. In fact, he has like 23,000 followers on LinkedIn. That's super impressive. So you can find Laurent Lequeu over there and yeah, connect with him and continue to ask him questions if you have. Yeah, so fantastic. Okay, awesome. Can everybody type thank you in the chat? Okay, thank you, Lauren, for being here.
Yeah,
Awesome.
I'm glad to be back.
Yes. Okay. And yeah, we okay, by the way, guys, we haven't ended yet. So because I also talk about how to buy gold and all this, right? So if you are interested to learn about some hands-on demonstration, I will also be showing you some of the additional things like using brokerage tool. If you were to invest in gold ETF, right? You can choose to do that. All right. So this is more like a hands-on time. Again, everybody type hands-on in chat. Right, so if you have some additional time, maybe like 15 to 20 minutes, then I will go hands-on. Should anyone interested to start, having gold ETF inside your portfolio. But of course, Lauren said that the best is actually buy physical gold. Uh, and of course, for physical gold, you do need to spend that more effort. But at the end, then you really have true ownership. But if you are thinking that, okay, if I don't want to have physical gold, but at least I want to tap into the potential of gold in the future, that's how gold ETF also comes in. So I want to just get hands-on in a little bit. Yeah, so some of you, Calvin is already like you are investing using gold as well. So I'm just going to share screen over here. So I'm going to demonstrate using this brokerage platform called Longbridge. All right. So I mean, there are many different platforms out there. And if you were ask me, okay, the most highly liquid, uh, like almost one of the most established ETF is definitely GLD, right? So one thing for buying ETF, you want to pay attention is the fees. And so for GLD, it's actually 0.4%. Later on, I will also share with you another ETF that it's cheaper in terms of the expense ratio. So when you pay lesser fees, that's how your return can also increase in the long run as well, right? But nevertheless, if you want to do GLD, that is one of them. And on top of that, okay, one thing about GLD, it's highly liquid, and because of that, the options it's also way more attractive. So I also want to quickly demonstrate for those who want to explore the idea of using options on Gold as well. All right, so how many of you are ready? If you're ready, can you type ready in the chat? All right, so I'm just going to share screen from my mobile because it's a brokerage app that is on mobile, right? So Longbridge is one, it's also MAS regulated. I personally started like using it a few months ago, and I transferred quite a bit of my portfolio from another brokerage account to Longbridge just to also diversify my brokerage risk. And because also there are a lot of good promotions ongoing, they give away very good like free shares and like transfer in bonuses, and that's what I did. Okay, so basically I transferred in quite a big amount of my portfolio over there. But one thing is, if you were to do like invest in gold, right? One thing you can do is you don't have to do like buying $400, $500 every single month. You can even just consider doing dollar cost averaging, right? And doing dollar cost averaging in a way that you are not timing the market. Okay, Lauren predicted that gold is going to increase to like $5,000 in prices, right? So right now it's $3,000, right? $3,000. But who knows, right? Maybe in between this 1 year, there will be a lot of volatility involved. So what you can do is you can do dollar cost averaging. Every single month, you buy 100, you buy 200, depending on your portfolio size. And if the market trend up, great, you buy it with the market going up. But if the market go down, your dollar cost averaging also helps to lower down your purchase price. How many of you understand where I'm coming from? If you understand, can you type me in the chat? Okay, so that is the power of dollar cost averaging. You are not timing the market, you are just riding together with the market, right? So what you can do is, for example, over here, right, let's say I want to do GLD. And after that, okay, you can see that right here, all right, if you were to buy the shares directly, you can see actually there's a button called buy at the bottom. So you can just buy, right? If you want to buy like one share, you can buy one share, right, which is $327. But you don't have to buy one share because it also enables fractional share. So let's say you just want to have like $100 budget, right? You can buy like 0.3 shares. That's another good thing about all these brokerages account right now, they support fractional share. So whichever amount that you are comfortable with investing, as long as it has fractional share enabled, then you can invest with the amount that you are comfortable with, right? So that is one thing that you can do. You can just like click submit, and that's how you are able to just buy your first $100 of gold. As simple as that, right? But if you actually want to do like a dollar cost averaging, that means like every single month you just set aside like a fixed amount of money to do this. Okay, let me see. Okay, over here, if you go to the portfolio tab and then like you go to the more tab. So over here, I think they should have RSP, right? Let me see. Do they have RSP? So in other brokerage platform, it's actually called RSP. I think they definitely should have RSP as well. Yeah, okay. But previously, what I did was I actually buy multiple time of GLDM, which is another ETF that I want to talk about, and to hit that trades count. Okay, later I will share with you why I do that. Okay, but okay, you probably just need to go and explore a little bit, but that's how. Okay, let me see under more. Do they have RSP? Okay, let me see. Okay, this one I haven't fully explored yet, so I'm not too sure whether do they have RSP or not, but definitely you are able to use fractional share to buy whichever amount that you're comfortable with. Okay, how many of you are clear on this? If you are clear, can you type C in the chat? Okay, C stands for clear. Like you buy $100 also can, you buy $50 also can. In fact, you buy $5 also can. Okay, that's the beauty of fractional share investing. Okay, you can like do that every single month by yourself as well, right? Now another thing is, if you were to do options, personally, I think that GLD is the best. Because it has a lot of liquidity. And you can see over here at the bottom, right, there is this option tab, right? So you just click on the options. And over here, you can also find that there are many different dates for you to choose from. So for me, all right, I love to do sell options because I love to own the ETF, in this case GLD, in the long run. Why do I want to own it? It's because, well, in the end, the gold price go up, my GLD is going to make money. So from the idea of I want to become the owners of this ETF, right? So what I usually like to do is actually do sell put option, because when I sell put, I basically make a promise to buy this ETF at this current price that I set for myself. So if you do a very simple analogy, let's say, right, today, the gold price for GLD is actually $325, right? So which price would you like to own GLD, guys? Do you want to own it cheaper or more expensive than current 325? If you want it to be cheaper, type cheaper. If you want it to be more expensive, then expensive. Exactly, right? Brian also said you want to buy cheaper, ma. So that's how actually you can use sell put option to promise to buy your stocks cheaper, right? So instead of buying it at 325 0.59 and above, which is the current price, I definitely want to buy it lower than my current price, right? So let's say I want to buy it at like $320 as an example, right? So in a way, I lower my risk by $5 because I'm promising to buy at 320 instead of 325, right? But even though I lower my risk, I still get to collect premium in this case. So how much premium do I get to collect? You can see that there's this 2.68 on the right hand side, right? So this is actually my sell put option, right? So when I sell this put option, I can actually get to collect $268. And this is a 16-day put option, which is going to expire in the next 16 days, depending on how the market moves. If I get my stocks, I'm happy. If I expire, I collect 268 free money anyway, right? So if you calculate the return on your investment, 268, right? It's the premium you will collect. Divide by how much is our capital requirement, because we are promising to buy at $320 per share, and options is always 100 shares. So in this case, you do need $32,000 in terms of capital. And this is, once you do that, you need to divide by 16 days, because it's per day, you will calculate how much is your ROI. And if I times 30 days, which is a monthly return, it's pretty decent. Okay, my monthly return by selling this option actually get me 1.5% per month. And if I rinse and repeat, right, that means I annualize it every single month. I keep on doing this. I times 12 months, for example, right? I rinse and repeat for 12 times. That's how I use options on GLD. My annualized return is actually 18%. How many of you think that this is pretty good? If you think it's pretty good, can you type O in the chat? Okay, O stands for options, right? And obviously, you can always adjust your price accordingly, right? If you actually promise to buy at even nearer to the current price, actually you will get even higher than 18%, right? Because technically you are increasing your risk by a little bit. But if you think in the long run, when gold price continue to go up, it's actually a very, very safe way of collecting your gold, which is GLD ETF in this case, even cheaper than the current market price, right? So that's how you can actually use options on this as well. Okay, so now let me stop share on here, because I want to go back to some of the other cheaper version of Gold ETF, right? So this is using basically Longbridge to do options as well. And for those who are wondering what is options, if you don't understand what exactly that I talk about, because of the time constraint, I can't go through step by step. But if you want, you can actually go to my 2-hour masterclass. And then from there, I actually have more step by step elaboration and explanation of how you can use options to increase your return in a very safe way, right? So if you have attended before, then you will actually know how. Oh, can post the link. Okay, let me just post the link over here so that everybody can get it. All right, there we go. Okay, good. So if you click on the link, there are actually different timing that you can select from. So you can choose the one that you are able to make it. All right. So then you will actually learn directly from this options class and learn more about options and how you can increase your return even more from that. All right. So now let's go on to the next one. Okay. However, if you are looking for a cheaper version of GLD, because remember GLD is about 400 over dollar, and the expense ratio, which is the fees that you will be paying to buy these ETF, is 0.4%, right? And how many of you would love to have a cheaper version in both the price, the stock price, and the expense ratio? If you love it, can you type C in the chat? C stands for cheaper version of it. Good, okay? So the cheaper version of it will be a Gold Mini, okay, GLDM. It's by the same issuer, World Gold Council, and we all know that, I mean, World Gold Council is very established, right? And the expense ratio is only 0.1%, which is in fact like 4 times cheaper than just now. And in terms of the price, it's only $68. So in a way that if you just want to buy one share every single time, this will be a better choice because directly you buy, it's only about $68. As it continue to increase, probably 70, 80, and eventually if it hit $100, you actually make 40%. Okay, if 68 go up to 100, wow, you actually make like 30 over percent already, which is also good, right? But it's way more, I think, easier way to enter the gold market with a fixed amount of share every single time, right? And because of expense ratio is lower, in the long run, you save on the fees, you also increase your return as well. Okay, how many of you understand where I'm coming from? If you understand, can you type GLDM in the chat? Okay. And the same thing, okay, let me just demonstrate on the Longbridge platform. And for GLDM, very simple. You just need to search for the ticker called GLDM. Now, of course, everything has good and bad, right? So GLD is the most popular ETF, and that's why it's optionable with lots of different contract dates and all this you can choose from. All right. However, for GLDM, it's not as popular, right? In terms of trading liquidity, it's definitely a lot lesser. So you can buy it for long-term holding, but not so much for doing options trading. Okay. In fact, when you click on GLDM, right now it's about $70, right? And if you click on options, there's no such options chain available. That means you can't do options on GLDM. But regardless, you can actually go and buy this and for long-term accumulation, right? And if you want to buy like 0.1 share, also can. So technically, if you buy 0.1 share, it's only $7, right? If you want to buy 0.05 share, also can, which is about $3.50. Technically, you can also start owning your own gold ETF. So previously, what I did was because I was trying to satisfy the number of trade count. So I did a lot of GLDM like multiple times. Okay, let me show you. Okay, so there was a period of time that I just bought like, let me see under my orders. And then you can see my past order. And yeah, guys can see GLDM, I buy 0.05 and then I buy another 0.05 of GLDM. Like basically I repeat that a lot of times. Is because I was trying to satisfy the trade requirement to hit my free bonus. Okay, what is my free bonus? Okay, my free bonus is I am aiming to get a free iPhone using Longbridge, and that's why I need to complete the amount of trades that I need. Okay, yeah, but if you're not aiming for free iPhone, you don't need to do what I did. Okay, but you can still use the fractional share concept to complete whatever trade amount that you need in order to get free shares. Because right now, actually, Longbridge, they are also giving away quite a good account opening bonuses. And that's why if you are looking for free shares, that's what you can do as well. Okay. And this is what I did, guys. So for GLDM, right, I buy like many, many times. And eventually, right now, since I bought it, it basically went up like about 3.5%. But of course, the amount is very little because my goal of buying this is not to really invest using GLDM, but to hit the trade count amount. But in the long run, I do see that actually having gold as a way of diversifying my portfolio as well. So actually, I am considering doing like even options on GLD in order to collect gold in the long run, right? So Yeah, so Julia, I answer your question. Unfortunately, not optionable for GLDM. So you can use it for long-term holding, right? So yeah, so that's what I did. I did buy fractional shares multiple times to satisfy the trade count, right? So before I wrap up, I just want to share with you. Basically, this webinar is also part of the sponsored webinar by Longbridge, and I want to share with you some additional insights. If you were to choose using Longbridge to start your own investment journey, they are actually giving away very good account opening bonuses up to like 800 Sing dollar. And I think this is probably one of the best deal that you can find from the market as compared to other brokerages account out there. And on top of that, right now, they are also giving away like free trade coupons. Technically, when you trade, if you use all these coupons, actually you are trading for free, and this will be lasting for 90 days, right? The moment you open your account, every single month you will have 100 free trades. So 100 free trades, basically that is more than enough to cover whichever things that you want to do. And I think the free trades cover shares. It doesn't, I think probably a required amount is because you want to get more free shares, which I'm going to share with you. But firstly, what I personally like about Longbridge is it does give like lifetime free commission for US, Hong Kong, and Singapore stocks, right? And then on top of that, right now, because of the free coupons that they give away, like the trade coupons, so end up when you, even though they have platform fees, the platform fees will be negligible, or in fact actually become zero when you actually use those trade coupons, right? And on top of that, when you deposit like $2,000 or more, for the first $2,000, it's gonna be like a 6% interest boost. So your 2K is going to give you a 6% return, right, for 90 days. And if you are using the link that I'm going to provide for you later on, in fact, you will get additional 6% boost. So technically it's 6 plus 6, you will have 12% interest boost for your first 2,000 Sing dollar, right, for 90 days. And then after that, it will resume back to the normal rate, which is based on the latest money market funds rates. So right now, the money market funds rate is about like 4%. So technically, after 90 days, anything above $2,000 or yeah, basically after 90 days, it will resume back to the about 4%, depending on the market condition, the money market funds back then later on, right? And like I said, right, the zero platform fees, it's only available for the first 3 months, and it's capped at 100 trades per month. But I think 100 trades, it's definitely more than enough for, I think, most of us, or 99% of us, because we don't really trade so actively. We are more like buying and holding. So it should be enough. And why you want to have those trade satisfaction is because you want to make sure you go get additional free shares, right? So for example, if you deposit $2,000 and you maintain for 30 days and you complete 3 buy trades, for example, you decide to buy GLDM fractional share 3 times, right? Then you unlock a free 0.5 Nvidia shares, right? And if you buy like you fund $10,000 and you actually complete 5 buy trades, you actually get a free Apple, right? And if you get like the 100K, then you maintain for 90 days, you satisfy 8 buy trades. That's how you will get Nvidia, Apple, and Google share. So in total, they add up like for the tier 3, you up, it's about Sing dollar 800. So for me, I'm gunning for that. So I actually have my 100K transfer in. On top of that, I also transfer in some of my shares so that I can unlock additional bonuses. So that's what I do, and that's why I did multiple fractional share purchases as well, right? And of course, not all my cash will be used up. So that's why during the normal time when I don't need to use the cash, I will put inside this money market fund, which is also called Cash Plus, right? So Cash Plus, right now, since I funded my account into Longbridge, it has made me about $250. And every single day, you can see that there will be like daily interest, right? Remember the interest boost, right? The daily interest boost actually coming into my account because of the 6% plus 6% boost. And on top of that, some like other like the normal boost for anything that above 2K, you still make money, right? So that's what I personally do. I like to activate Cash Plus. Okay, so if I use ISP to buy GLD or GLDM, it doesn't matter. So Brian, right, whichever that you can choose, right? So like I said, okay, that's why if you are interested to also explore a new brokerage platform and you actually want to unlock free shares like I do, okay, I personally love to collect free shares because you get those shares to work for you, right? Why not, right? And you get like 6% interest boost, then you can use this code and consider opening up an account with them. Now, let me also share this link inside the chat so that you can open that if you are interested in. Okay, there we go. Okay, all right. Okay, any additional questions before we wrap up? Does anyone have any questions but whatever things that we've gone through tonight, or how to use the platform for certain things? If you have any questions, feel free to use the next, I think, 3 minutes to ask, all right, before we wrap up. It's all good? Okay, if it's all good, I think that's all I have to share tonight. Okay, so hopefully you guys find that insights useful, learning from Laurent himself, learning from me doing certain strategy like including options on gold. For me, in the long run, I still think that collecting the physical gold, it's definitely a much better way to diversify because you own it. But in the short run, if you felt like it's too troublesome to buy a physical gold bar, yeah, you can consider using ETF in the meanwhile, while preparing your cash to buy actual gold bar. Okay, so tier 3 can be cash plus stock transfer. Oh, okay, so this one, it's only for injection of new cash. Yeah, so this one, it doesn't inclusive of stock transfer. Yeah, it must be deposit 100K. Yeah, but if you want to transfer in, maybe they will also have some additional transfer in bonuses. So I did my transfer in about 2 months ago, right, in July. So at that time, they had a very good transferring bonuses of giving away a free iPhone when I'm transferring 500K. And that's why I went to transfer 500K plus a deposit 100K, right? That's how I have a 600K portfolio inside. And yeah, but right now the transferring bonuses might have changed. So you might want to use the link that I sent you just now and see the transfer in bonuses. Yep. Okay, any more additional questions? In the meantime, okay, you can also go and check out what they wrote in their website, longbridge.com, and they will have, let me just see whether they have the bonuses thing. Welcome rewards. Yeah, okay, so if I share screen on there here, if you go to the welcome rewards tab, right, they will tell you exactly what are the perks that you get. Like I said, right, you deposit 2K, right, you will get 6%, right? But if you use my link, you will get 6 plus 6%, right? And then on top of that, you get like the Nvidia shares, right? And then if you deposit the tier 3, that's how you get all the Apple, Nvidia, and Google shares, which is almost 800 Sing, and the 6% for the first 2K, right? Plus additional 6% using my link, right? And I don't think they have any the account transfer in bonuses for now. So maybe they closed it, but nevertheless, you are able to get almost $800 worth of free shares. Deposit only. So technically, you just need to, okay, actually, you do need to part because you need to part at least 2K, ma, right? When you part your 2K, that's how you will get the 6 plus 6% interest boost. Yeah. And if you ask me, is it safe to put your money inside MMF, money market funds? I personally think it's safe. So I do that. And I only see like, firstly, money market funds, it's something that is highly, like a very high grade investment. So in terms of safety level, I believe in it. And secondly, the fluctuation is like almost minimum. I never see kind of fluctuation for my money market funds. And thirdly, it actually give me very decent return, right? So for me, most of the time it's 4% because anything more than 2K, it's 4%. But within the 2K, you will get the 6 plus 6%, right? Only for the first 90 days, of course, right? Any more additional questions? Okay, maybe let me show you for the Cash Plus, how it's being activated. So over here, if I share screen on my Longbridge again, Okay, so over here you can see that my cash, right now I left with only $15,000, right? Because I recently during the April crash, then after that subsequently Berkshire Hathaway continued to crash, I actually buy more, right? So right now I'm only left with 15K. Now after that you can see that once I click into cash, you can see it's already activated. So my cash plus has made me about $336 since I put money inside Longbridge, right? And if you see here, every single day, right? Basically, it's being activated for my US dollar. I put inside this iFast USD Enhanced Liquidity, which is the cash plus version of money market funds over here, right? And I don't get to choose because it's already set automatically, right? And if you have SGD, which I have a little bit of SGD, then I'm also making about 1.13% return. Okay, so SGD return, it's sorry, SGD return is here. Okay, so SGD is 3%. Actually, it's quite good. SGD is 3%. And then for US dollar, it's about 3.88%. So I think that because they are predicting that the Fed is going to cut rates, so they cut rate earlier than what Fed is going to do, right? But you can see regardless which currency you put in, it's giving you pretty decent yield, right? This is per year, of course, per year. And then after that, you can see my my P&L, right? Every single day I made, like if you go to the past P&L, right? Past P&L is like every day you get to see your interest coming in a little bit, and that's it, right? So sometimes you will see more. It's also because of the based on their different calculation, and on top of that, I will occasionally receive the additional boost, right? Remember, because I'm still within the 90 days period, so I have the additional 6% boost. All right. So I think it should be quite clear for everyone. Is this clear for you guys? If that's clear, can you type C in the chat? Okay, how to use Longbridge and all this, and how can you basically make use of fractional share to get your free trades, and on top of that, get your free shares. Okay, awesome. Thank you so much, everybody, for joining me, Eleanor. Hello, Mano. Okay, good. All right, so I'll be uploading this recording to my YouTube channel, so just stay tuned. In the meantime, feel free to join my options masterclass if you are someone looking to actually learn to increase your return safely even more with the help of options. Then you can also just scan this QR code and join my options class, and I will see you there as well. All right, so once again, thanks everybody for joining me tonight. Really appreciate your time, and can't wait to level up your portfolio building together. All right, I will see you guys next time. Arigato. Thank you. Bye. See you. Bye.